I start with this levy from the Central Bank of Nigeria. It looks like banks are required by the CBN to implement cybersecurity levy deduction procedure, which will be overseen by the National Security Advisor's Office, the NSA. So it's a 0.5% deduction. It's going to be paid by the originator of the transaction, remitted to the National Security Cybersecurity Fund. That's domiciled with the CBN. Deduction begins in 2 weeks. It's backed by an act, Cybercrime Act of 2024, and there's been a lot of chatter on social media and everywhere else about this particular levy. Let's look at Forex turnover, and we thank Nairametrics for bringing this data to us. At the NAFEX, the Autonomous Foreign Exchange Market, the daily FX turnover, as of yesterday, fell to a 10-week low of $84.3 million. Now, prior to that, the prior low was February the 19th. I think it was $66.3 million, which was the prior low at that, as far as the daily turnover is concerned. And that was February the 19th of 2024, $66.6 million. So that is something that has to be looked at in terms of foreign exchange in the country. We're also going to jump into some bank earnings. We are incredibly happy to have the man himself, UgoDre Obi-Chukwu, who, of course, is the founder and chief analyst at Nairametrics. Ugo, good morning to you. Thanks for joining us.
How you doing, man?
Yeah, I'm doing good. Yeah, you were at Washington, D.C., the IMF spring meetings. You've been everywhere. Good to have you back in the country.
Thanks.
Banking, let's start with the bank Q1 earnings. You analyze the NGX all the time. You Nairametrics, you guys, financial advocates, you give advice on the markets. I don't know which ones you want to start with, but what's your overall arching view of the earnings we've seen so far at the banks?
Of course, Rotas Fugas. You got to start with the Fugas.
Yes,
the Fugas first, even though the F hasn't
the
results haven't dropped yet.
Yeah.
Expected. I hope it comes maybe anytime this week. But we've seen some solid numbers from the rest of the Fugas. Access, I think, was first out of the blocks with, the 202 billion in terms of pre-tax profit. I like to look at pre-tax profit for interim results. So 202 billion, solid numbers. And we thought, whoa, where's this going to? And then what also kind of caught our attention was the size of Access Bank. Access Bank is like over 30 trillion in terms of total assets. To put that into perspective, Rotas, that's like almost double the size of all the other companies on the exchange
put together,
minus the banks.
Yeah.
Right. So if you sort of sum up all the manufacturing companies, including the likes of even MTN and Dangote, sum of them up together, Access is bigger than them.
That's huge.
And to give you more context, the CBN as the Apex Bank, if you go look at their 2022 annuals, in total assets about 50-something trillion, and then Access is like 30-something trillion.
So it's almost
at this rate could even be bigger than the CBN. But in a huge number. The only challenge I've always had with Access is being able to sweat that number. They seem to be struggling there compared to other banks, but still solid numbers of around 202 billion. Earnings per share at I think 4 Naira 35 kobo. Relatively cheap in terms of valuation at 1x. The price to earnings ratio, pretty small, 1x price to earnings, like almost like if you look at the earnings per share, trailing 12 months earnings per share, right? Almost sort of the same with the share price, so pretty cheap. Then of course Zenith also dropped their numbers, very solid numbers. So after Access, we're like, what else is going to top this one? And Zenith came out of the blocks, topped it with 320 billion.
That was big.
Yeah, in pre-tax numbers, solid numbers as well. Earnings per share even double Access. So again, just to show you how you sweat kind of assets. So as much as Access is bigger than Zenith in terms of total assets, but in terms of being able to sweat that asset, you're seeing Zenith do a lot more. So at 8 Naira 22 kobo in earnings per share, which is my favorite number. That's what I like to look at, earnings per share, because you got to look at earnings per share versus the nominal shares, and that gives an idea of how well the company is doing. So at 8 Naira 50 kobo earnings per share, and Zenith did a lot better, and that's 1 quarter, Rotas. 1
so
quarter,
you imagine
not a whole year.
Exactly.
So analyze that. It gives you a perspective of how solid those numbers were, and of course. Zenith is at price to earnings of about 1.6, looks pretty cheap as well. And then from nowhere, GT shows up with a banger,
with some very efficiently run.
Like never seen those sort of numbers before.
Right.
Like,
Those are the highest quarterly profits ever in their history.
Tracking numbers for years and never seen those sort of numbers before. Solid at 500 or so billion in pre-tax profits for 1 quarter alone. I think maybe close to like 85% or so of everything they did last year in one quarter alone. Wait for it, earnings per share, 16 Naira. So you want to compare that to Access and of course Zenith. So it gives you an idea of how solid those numbers were as well. And then UBA as well in the mix as well also did pretty well. I think earnings per share for UBA was close to 4 Naira, 3 Naira, 96 kobo. That's solid number, solid result for them. Fidelity also behind the scenes, they're doing pretty well as well. I think they did notch in 30-something or so billion in terms of pre-tax profit. So we've seen numbers all around. And what the kind of trend I'm seeing here is all FX rotos. I mean, you see the impact of FX.
Your evaluation
on the
gains.
result of, so interestingly, unlike last year, what we've seen in the Q1 numbers isn't really revaluation gains.
Okay.
So at least that's not how they sort of, characterized it or captured it. It's more like trading income. So, but trading from maybe their FX positions. So banks have a lot of FX positions that they've sort of traded, through different kind of financial derivatives or financial, products. And the valuation gains from those, numbers or from those investments are what you're seeing captured in their books. So banks that have taken solid positions in FX are the ones that are reaping the benefits. And of course, we've also saw huge returns from, guess what, treasury bills. Free money.
Right.
You know what I mean? So with 19% interest rate, all banks need to do is just pack all that money,
throw it in there
and just sit down. And so that's been the number. So it kind of contrasts what's happening in Main Street because Main Street is suffering. So you're seeing manufacturing companies, just spoke to MTN now, you're seeing their numbers, you're seeing them declare huge losses. Retained earnings is essentially wiped out because of that. But that's how capitalism works, man. So somebody gains, somebody loses.
So that is the harsh truth. Ugo, what the stock prices are, we saw at least year to date for the banks that you've mentioned. So at least as of closing trading of yesterday, year to date in the negative region. Although if you look at 1 year, 2 year, they've done pretty well. What do you make of the pressure that the banks on the stock exchange have faced? Is it the higher rates making fixed income and money markets more appealing? What do you make of what we've seen so far?
I think it's a combination, but the common thread here is the central bank and monetary policy. And monetary policy is sort of dictating where investment is going to or how investors are kind of reallocating their portfolio. And so now that we're in a high interest rate environment because of hawkish monetary policy, you're seeing fixed income security yields go up. And so the conventional thing to do is to sort of reallocate your portfolio such that a lot more of your investment go towards fixed income securities and less on equities, despite how cheap equities still are at the moment. So I think that's what has sort of hit banks. And of course, banks are very liquid. Bank stocks are really, really liquid. So it's very easy to trade bank stocks, right? And so they get hit a lot. So stocks that are often illiquid tend to have sort of share price protection or they have solid grounds. But for stocks that are very illiquid, they tend to sort of experience a lot of volatility. And so you're seeing that happen to a lot of banks at the moment. And of course, one other thing that we sort of observed is investors kind of feel like because of the recapitalization plans of the central bank, a lot of people expect bank share prices to go down. Remember, a lot of the announcements you've seen have been right issues. And so right issues means existing shareholders are the ones that are raising capital. So it's not like they're going for public money. So if it's like, fresh issues or, issues to public because they're, maybe issuing new shares, then you see share prices tend to go up because then you want to sort of revalue your business higher. But if you're the one buying your own shares through a right issue, I think it kind of makes sense that you see it's just sort of like a depressed share price. So I think that's what investors sense, and that's why you've seen bank share prices kind of, go down over the last few weeks. And I think it's likely going to be like that as we go through this entire recapitalization process. But at the same time, opportunity.
Okay, so you've preempted my next question. So does that mean you buy into bank stocks now, or you
wait? Look at those price earnings ratios.
So
I just told you, you're seeing price earnings ratio at 1x, 1 point something. Like that's so to put it into perspective for maybe your people watching, like shares are valuation when it comes to shares. Typically, the easiest thing you want to look at is price to earnings ratio.
Okay.
So the higher your price to earnings ratio, the more expensive a stock is. So the closer to 1 a price to earnings ratio is, the cheaper it is. So when a stock is at 1 price to earnings ratio, you're basically saying that the earnings per share and the share price is the same thing. Doesn't make you're buying that stock for steal. Right, exactly. So, and then in the same market, you've got some stocks that have price to earnings ratio of like, I think the average NGX price to earnings ratio is probably like 12 times or 15 times earnings. So you're seeing a lot of these bank stocks at 2 times. In fact, I think it's only GT that has about 2 times earnings. So they are pretty cheap. Of course, it's because of a lot of these revaluation gains, but you know what? That's money. And something else, Rotos, it's very, very likely that a lot of these banks are going to pay generous dividends this year. And that also kind of makes sense because retained earnings are not part of what the CBN has classified as share capital for the recapitalization exercise. And so what are they going to do with all those retained earnings? You got to pay them out as dividend. And then you pay them out as dividend and you reinvest them back as share capital. So I kind of feel like a lot of bank stocks are on my radar at the moment, and it's likely going to be like that for a protracted period.
All right. Now, I want to take you to the fixed income money market side, right? Since we already talked about the different issues impacting bank stocks, the debt management office, there's a new window now for retail savings bonds. And you know, I feel like the Nairametrics did point out that this is one of the highest rates we've seen. So 2-year 17, 3-year 18. What do you make of, what's your view on the offer?
Sign of the times, my brother. Sign of the times. So I know you don't like interest rate rates, but I really like,
as long as you make more money and we are getting more higher returns, so I think it's just,
Well, I mean, it's sign of the times. We're in a high interest rate environment. The central bank made it clear that monetary policy is going to be hawkish, at least in the near term, so that they can contain inflation, which is really their major concern, and of course, sort of also stifle the amount of naira that is chasing after dollars, so that you can have some form of stable exchange rate, right? And so that policy means yields are going to go up, and so it kind of doesn't make sense if treasury bills are on 19% and then FGN saving bonds is coming at 11-12%. That it had been, over the last few years. And so that's why you're kind of seeing it higher, because all these fixed income securities around at the moment is at that 17-18% level. So you can't have FGN saving bonds trading a lot lower. So that's why you're seeing those yields high. Now, it could come back to bite us down the line, because these are yields that we still got to pay for. Right? We got to pay for it. And we've also seen FGN savings bond, the debt itself more than double over the last 5-6 years. And so at some point, someone has got to pay for it. And Nigeria has got to pay for it one way or the other, probably through taxes or increase in taxes and things like that. So we will still pay for these things. We'll pay for it. But at the moment, for retail investors who FGN saving bond is for, I can't see any better time to invest in them. Because 17-18%, it's a freaking steal. You know that. So,
exactly.
I mean, you put in 10 million naira in there, you're getting 1.7 million.
That is
just like that, doing nothing.
Solid.
Put in 1 million naira, you're getting 170,000, doing nothing. So that is solid numbers. I don't know when else we're going to see anything like this, anything close to this, but that is the sign of the times, like I said.
Hey, Ugo, fantastic stuff. We put some stuff together. What's the ideal investment portfolio look like? Is it a mix of stocks, bonds, cash, crypto, real estate? What's a quick suggestion on what a decent investment portfolio would look like at this time?
Interesting question, Rotus. But it's like a moving target. These things kind of change. It depends on what era, what sort of trending at the moment in terms of the economy. Now, if I was going to look at going to recommend a portfolio, I would say you want to have a mix of dollar earning assets in there, because that's really what matters now. As much as inflation is a problem, we do think at Nairametrics that purchasing power is even a bigger problem for Nigeria. Right? Where you have minimum wage in Nigeria per hour, sort of try and divide minimum wage per hour in Nigeria, it's less than $1.
That is
right?
Tough.
Whereas in Europe, you're seeing it at $12, $14 an hour. Some parts of the US maybe $8, $9 an hour. So you know that as much as inflation is elevated, things are actually not as expensive as they are when you compare to other countries. So the problem is really purchasing power. So what you want to do is, have investment in assets or securities that can give you sort of dollar earnings. So whether it's Euro bonds or whether it's mutual funds that are sort of dollar based, you want to have a sizable amount of that in your portfolio. And then, of course, a lot of Nigerians who now earn abroad, I think you've got to keep that on. For people who are looking for maybe side hustles that can give you earning abroad, these days, a lot of gig workers do that. So we're no longer in the era of 9 to 5. You know that, man. At 5 o'clock when you're done with work, rest for another 3-4 hours, better clock in another 3-4 hours, working for someone in Malta or US or wherever. I mean, sort of get that effect. And so I think that is where we go. Then, of course, equities. Always for me a good investment. Not all stocks are good, by the way, but there are certain stocks that would never fail you, especially dividend paying stocks, and there are so many of them on the exchange. And of course, this is the era of fixed income securities, and so you want to have that in your portfolio because that sort of hedges against inflation. So that would be my mix.
Solid stuff.
Real estate, of course.
Real estate, solid stuff. And again, people who hop on Nairametrics can see all this stuff. I gotta get your thoughts on this CBN levy. Everybody's talking about it. This cybercrime thing. What do you make of it? The 0. I'm sorry to put you on the spot. I have to get your thoughts. What's it's everywhere. I mean, you guys, it's
a tax. That's what it is. I mean, I think this is not a new law. I think all they are doing now is just implementing the law that was passed maybe 3, 4, or maybe 5 years ago, or something like that, if I'm not mistaken. Pretty not the very recent thing. And I think you're likely going to see a lot of that happen. I was in some forum recently, and I had even the last National Assembly passed several laws that have tax implications. Let me give an idea of how Nigerians pass laws, in case you haven't noticed. Right? So when you set up a new body, a new parastatal, a new government agency, and things like that, lawmakers have a way of asking themselves one very good question: How do we fund this agency? How does this agency sort of fund itself, right? Apart from so that you cannot try and make it independent. And so they now weave in one, charge, or give them one power to collect one levy or one thing or the other. That's the conventional way of sort of writing legislation here. And so if you go and look at nearly every legislation you have that sets up parastatal, they all have one kind of hidden tax here and there. And that's what this is. Do I like it? Of course not. I don't. But you are in interesting times where you're seeing government revenue are completely strained. You're seeing labor asking for a minimum wage increase.
600,000.
Correctly, they should ask for minimum wage increase. Whether it's 600,000 is a different thing. Some people have said maybe it should be living wages, not even minimum wages. But these things need to happen. But something has got to pay for it, and that's what's going on here. Government is not going to pluck that money, from the tree. It's got to be through taxation.
It'll be a crime, not a cyber crime, but a crime if I let you go without asking about foreign exchange. And in fact, it was from Nairametrics, because you guys track FMDQ, where I got the data on the daily FX turnover falling. We've been through so much in just when Naira was at 1,008, actually it's appreciated to 1,001. It's gone back to 1,400. Ugo, what's your take on what we're seeing?
Well, I think the CBN governor kind of captured it at the spring meeting when he said you're going to see volatility. I mean, it's essentially free market. There's no fixed exchange rate anymore, so you're never going to see the Naira, stable, or fixed. So you're going to see all this volatility for a while, for a bit. The turnover you're seeing here, maybe it's a blip because it's kind of unusual for that sort of low number this period. But I think for me, Roots, what I always say is look at how we're able to attract Forex. If we can't attract $10 billion in FX this year, I would have to bet against Naira. There's just no two ways about it. In fact, if you can't attract $5 billion between now and mid-year, June, I got to bet against Naira because it's going to be difficult to think that the currency will be stable because you don't expect the central bank to burn through reserves to try and defend that currency. And so what we should be asking those in government, particularly the Ministry of Finance, is how are you going to attract capital? What are you doing through your agencies? That's what we need. So all this you're junketing around the world, it's going to be 1 year in May 29. It's going to be 1 year. So how much have you brought in? Right? FDIs over the last 10 years, so it's not even up to $10 billion.
Wow.
FDI over the last 10 years. So we can't continue that way. I'm not even talking about FPI now. So for me, all these pains we're going through, high interest rates, just so that we can see, exchange rate stable. It's got to count for something, and that is FPI inflows. It's got to come in. We can't go without. They claim $3 billion came in the first quarter. We haven't seen those numbers.
I've learned now that I need to
let's
verify.
Wait to see, MBS results come out, numbers come out. But again, like I said, for you to want to see that exchange rate that is stable, we expect 10 billion. I think Nigeria needs about 18-19 billion dollars annually to have stable exchange rate.
Yeah.
Go look at the numbers. That's what it's always been.
Yeah.
For the years that we'll have stable exchange rate, that's what it's always looked like. Whether it's 2019, 18-19 that we have stable exchange rate, or you go back to 2013-14, it's always been around that number because of our kind of demand.
Yeah.
And so $10 billion
is even small
in the bucket
compared to that.
But of course, I haven't accounted for FX inflow from sale of crude oil and all those other things. But in terms of FPI, typically FPI in Nigeria should give you about $20 billion annually.
Gotcha.
Get that, you have a stable
and then
currency.
you're good.
So I'm even telling you $10 billion.
Ugo, we've run out of time, but you are a big player in the electricity sector. Can you promise to come back next time where we have a deep dive on electricity? We've run out of time. So
I love electricity, of course.
So next time we'll have you on electricity.
Definitely.
UgoDre, founder and chief analyst at Nairametrics. Thank you so much for your time, Ugo. Really appreciate it.